Well, folks, we have some more stocks to talk about in this episode of Stocks Talk Stocks, and this is actually part 2, where we're going to talk about 7-8 stocks, and part 1 was yesterday. I'm not sure if you caught it, but I couldn't make put all the stocks in one video, so I figured let me split it into part 1, part 2. So after this, go watch part 1, but you got to make sure to watch this part first because we have a lot of stocks to talk about. So if you all find value, hit the like button, make sure to subscribe, and of course, take a sip of your coffee, guys. And on top of that, don't forget to get up to 15 stocks for Moomoo, each up to $2,000 and up to 12 stocks from Webull with any amount deposited. All those details, all those free stocks are linked down below. And just know, guys, all those links down below are affiliate links that help out the channel. And with that being said, let's dive into it with stock number 1, which is none other than Caesars Entertainment, ticker symbol CZR. And we're going to break down some estimates in this video, guys, like always, in terms of EPS and revenue. We're going to talk about some numbers, but you have to realize these are all estimates. We don't know exactly what the numbers are going to be, but Caesars is looking to do negative 15 cents EPS on the quarter, so they're going to lose money on the quarter on revenue of $2.8 billion, which would be up 8% year over year. And right off the bat, we're noticing a big resistance in the mid-50s on CZR. Again, Caesars Entertainment. That's right, where we failed the past couple of months. And honestly, 50 to $55 has been a big sticking point for more than just a couple of months. It's been a while, and we're noticing we have an ascending triangle right off the bat, which you guys can maybe not, I don't know, but I'll point it out to you here. Maybe you see it. We have clear resistance, like I said, in the mid-50s in the past couple months, but at the same time, we've been making those higher lows. You guys can see that. So we're pretty much squeezing ourselves deeper and deeper into that triangle to the point where, are we going to break 55 and see a leg up to the 60s, maybe higher than that, or are we going to collapse under 48, break the 180 SMA, break the uptrending, the uptrend, and then of course the bears are going to gain the advantage from that point. So it's kind of like a waiting game at this point with earnings tomorrow. And if we pull up the yearly chart on Caesars, look at this. We have an inverse head and shoulders, which you guys probably caught already, but I'll point it out here to show you all on a larger time frame. So we have the left shoulder right here, the head's right here, and the right shoulder's right here. And again, we have that ascending triangle essentially in the right shoulder. So if we do break 55, 56 on Caesars, this thing's got some room to run. I mean, it's got some room to run, probably towards the mid to low 60s, maybe even higher than that. So Caesars is number 1, the first one that I'm looking at least in this video. Of course, part 1 was yesterday. Make sure you guys go check part 1 out after this video. But that's Caesars, and I think it's poised for a breakout if these numbers, guidance, if everything's looking pretty good. And we also have Realty Income, which is actually not a stock. It's a real estate investment trust. And real estate investment trust, guys, in general, they're great for people that want to invest in real estate that don't necessarily want to go out and actually buy a physical property, whether it be a single family, a duplex, or, a building. I don't freaking know. I mean, commercial property, whatever it may be. If you don't want to go and do that, or maybe you don't have enough money to go do that, which a lot of people, let's be honest, they don't, you can go and buy a real estate investment trust with as little as $100. Well, these days, you could probably buy $1 worth of a real estate investment trust because now there's fractional shares. So this is a great way that you can go invest in real estate with very little bit of money, a small amount of money. And I actually own Realty Income myself. This is a great REIT in my opinion. It's a triple net lease. That's how they structure their properties, which we're not going to get into in this video. But it's very safe in my opinion. They always have a very high occupancy rate. I think it's like 99%, 98%, something crazy. We're not going to do a full deep dive into this REIT, obviously, but they're good. They're great. I think the yield right now, I haven't checked it in a while. This is kind of one that I just buy, hold, set it and forget it, reinvest the dividends. I don't really pay too much attention to it on a month-to-month basis, but they are a monthly dividend payer. That's number 1, and they do increase their dividends nicely every year. And I think there's a stat out there since 1995, compounded, all the gains compounded, it's actually outperformed the S&P 500. And I'm pretty positive it's 1995 or 1994. Either way, it has outperformed the S&P essentially in the last, 25, 30 years. And you could go see it on their website. They actually have that stat on there. So Realty Income, I'm watching it very closely. They're looking to do EPS of 31 cents on revenue of $855 million, which would be up 24% year over year. So this is one that, I would consider trading, but I'm looking at it more as a long-term play. I've been buying it. I've owned it for a while, and I'm just reinvesting at this point. And the chart looks pretty good, honestly. It looks pretty good. The uptrend's holding. We're in a wedge. You guys can see higher lows, lower highs at the same time. So what direction are we going to pick? If Realty Income can start breaking above $67.50, $68, this could be setting up for a breakout, potentially back towards 70 plus, which, to be honest, you guys can see the chart here for yourselves. It has not been above 70 in a long time, and I mean not a long time, but about 4 or 5 months. So it's been a couple months. So let's see what happens at $68. That's where my alert's at here on Realty Income, and they report earnings, I believe, on Wednesday. Let me double check. Yeah, Wednesday they report, and we also have on Wednesday Baidu, which is you guys probably know, a Chinese company. Baidu's chart right off the bat looks pretty good. It's been uptrending for months. We do have a bit of a head and shoulders here that played out. We're pretty oversold now. We're right above the 180 SMA on the 4-hour chart. So this is, heading into earnings in a pretty interesting position. The fact that it's oversold, it's already down about $25 from the recent peak. In other words, 15%. So if numbers are good, guidance is strong on Baidu, this could be setting up for a breakout potentially. And they're looking to do EPS of $2 on revenue of $4.66 billion, which would be up not much, pretty flat actually, up 1.4% year over year. So let's watch Baidu here on Wednesday. They're in the morning. Yeah, they're in the morning. They report. And we'll see what happens off of, this 180 moving average. We'll see if it holds the uptrend. We'll see if it doesn't. Time will tell, guys. We also have TJX. Let's pull this up. TJX is another one that I'm looking at. They're looking to do EPS of 89 cents on revenue of $14.06 billion, which would be up 1.5% year over year. Not too bad. Pretty flat. But they're looking to do 89 cents. And this stock's been doing very well. From $55 back in the beginning of July to now almost 80. It's up 47, almost 50%. That is pretty insane. So TJX, it's, I don't know. I don't really track this company too much. And usually when I see a stock up this much heading into earnings, I'm a little bit, cautious with it. But then again, it's been flat for the past 3 months, 3-4 months. A lot of the gains came from, the end of September to about the end of November. A lot of the gains came in that little 2-month stretch. It's been flat since. So we'll see. Do earnings launch this thing back to the low mid 80s, high 80s, or do we end up seeing a collapse and maybe this starts to fill the gaps down, fill down to, let's say, $73. Maybe if that fails, we go back down 68, 69. Time will tell here, guys, on TJX. We also have good old Lucid Motors this week, or Lucid Motor, whatever it's called, or Lucid Group, or whatever the heck. I don't even know what's the official company name, guys. But I told you in my last video that I actually saw a Lucid car for the first time a couple weeks ago, or was it 2 weeks ago? I forget. It was recently. And it's not like it's anything spectacular. I've seen nicer cars. I'm sure you guys have as well. And they're really expensive. From what I know, from what I remember, the Lucid Air is what it's called. Isn't it like $120, $120K or something like that? Maybe more, maybe a little bit less. But that's pretty expensive. And I know they're catering to the luxury market, kind of like how Tesla started, where they started catering to, the luxury market. Then they're now trickling down, to the $40,000 to $50,000 market, $60,000 market. And of course, eventually they're going to have the Model 2, I believe it's going to be called, which is going to be the $20,000 to $25,000, $30,000 market, probably more 2025, which is going to reach the masses. Lucid's obviously not there, anywhere near that point. But they're just starting out, of course. They're just starting out. Revenue's looking to be $302 million on the quarter, which, get this, guys, is up over 1,000%. That would be up over 1,000% year over year. And they're looking to lose money. Not surprising there. They're going to lose 40 cents on the quarter. But again, that revenue growth is pretty impressive, 1,000%. which of course that's not going to, maintain forever. As companies get bigger, their revenue growth slows down. That's just how it is. But right now it's a smaller company. They're just getting started, and it's going to be growing pretty massively for months or quarters and years to come, unless it goes bankrupt, guys. But yeah, I'm watching LCID this week. They're on Wednesday, I believe. Let's double check that. Yeah, they're on Wednesday after the bell. We also have Sunrun on Wednesday after the bell, which is ticker symbol RUN. You guys can see it right here. Sunrun, let me double check that. Is it Wednesday? Yeah, they're Wednesday after the bell, and this, stock chart does not look good at all. I mean, this thing's been downtrending for months, and look at this. Back in the beginning of September through the middle of October, this thing got slashed in half, 50%, and it tried to see a little bit of a relief rally from that point, but we failed clearly at a lower high, and we've been making lower highs ever since. So to me, guys, this does not look good. It's a, you could argue there's a descending triangle. I guess you could argue, yeah, there's definitely a descending triangle forming here. If we fall under $22 a share on Sunrun, we're probably going to be collapsing back to the teens, in my opinion. So I'm going to set my alert at markets that were below $22. So they're looking to do -5 cents EPS on revenue of almost $600 million, which would be up 37% year over year. They're on Sunday, or rather Wednesday, after the bell. So keep your eyes on Sunrun, guys. It's in a very vulnerable spot, at least in my opinion. What do you guys think? Let me know in the comments down below. And the last stock for this video, guys, and by the way, if you stuck till the end, I appreciate you all. As always, it is Warner Brothers Discovery, which you guys may or may not know about this company. You probably do. This stock has done very well recently, from about $9, $8.82 to be exact. That was in the end of last year. Now it's at almost, $15? It's up 75% during that time period. Pretty impressive. They're looking to do EPS of -20 on revenue of $11.36 billion, which would be up 20, or not 25. Geez, I read that wrong. 255% year over year. Pretty good, guys. Pretty good revenue growth expected for Warner Brothers Discovery. And if I pull the 3-year up, you guys are going to see, man, this thing has been destroyed. And they were, of course, they got, yeah, they were with AT&T, right? Yeah, they got spun off. The what's it called? They split from AT&T. That was a while ago. I forget exactly when that was. And the stock got destroyed after that point. I mean, you guys can see here for yourselves. I don't think it was here, right? Maybe it was here. I don't know. I forget exactly when they split from AT&T. But let's just say it has not been doing well. The stock has not been doing well in the grand scheme of things, but in the past couple of weeks, sure, it's been doing well, but not really in the grand scheme of things here. And we'll see. If I draw some lines out, we have a big support at $13.85, $14. We're right at $15 right now, and we also have a big resistance coming up at about, let's say, $18. 18 is where we failed back in the middle of June. Also in the beginning of August, so we're kind of in no man's land at this point. It all comes down to earnings. What are we going to do between $14 and $15 as support with resistance at $18? I mean, are we going to shoot up towards $18? I have no idea. I'm going to set my alert, though, at $15.75, which is roughly the high from a couple weeks ago. If that's able to break, we can see a nice gap to about $18 if earnings are strong. Time will tell, guys. Time will tell. So with that being said, I'm going to wrap the video up. If you enjoyed it, of course, hit that like button. Make sure to subscribe, and don't forget to go check out part 1, which I made yesterday. Feel free to also get up to 15 stocks from Moomoo, each up to $2,000, and up to 12 stocks from Webull with any amount deposited. All the details are linked down below, guys. Get your free stocks. I appreciate you all for using those links as always, and feel free to check out the Patreon if you want to be a part of the Patreon portfolio. You want to see, the charts throughout the day that I post. You want to be a part of the Discord community. All of that's on Patreon, link down below. And with that being said, cheers. I'll catch you in the next video, guys. Peace out.